Layoffs. Ride-hailing giant Uber reporting its biggest loss in 3 quarters as the coronavirus batters the global economy. But shares are much higher this morning after optimistic comments from the company's CEO on demand that he says may be returning. Joining us right now, first on CNBC, is Uber's CEO, Dara Khosrowshahi. Dara, it's great to see you. I was just thinking we were sitting together outside of the New York Stock Exchange nearly almost to the day a year ago when you were pursuing your IPO, and what a year it's been. I want to, though, go straight to the moment that we are in and really try to understand what you're seeing. One of the things you said on the call yesterday was that there was a sense that we're seeing early signs of a recovery, potentially a bottom, and I wanted to understand what's leading you to that view.
Thank you, Andrew. That IPO seems very, very far away. In hindsight, we're very happy that we went after it because it really has provided us with a fortress balance sheet to be able to take on these incredibly difficult times. For us, Q1 was a tale of 2 quarters. January and February were strong. We were coming in as expected to stronger, especially on the profitability side. And then Corona hit. March was difficult. And in April, we saw our rides business, which is our largest business, it's very profitable, be down about 80% on a year-on-year basis, which, as you know, is a shock to the system. Step one for us is how do we make sure our drivers and riders are safe? How do we make sure our communities are safe? How do we make sure our employees are safe? But as we have taken care of our communities and riders or employees, we're now looking forward to the business. And we're making adjustments. We're making significant adjustments to our costs. And we are seeing in the rides business, while it is down substantially, there's no denying that, it does seem to be off the bottoms. Last week, for example, bookings in the U.S. were up 12% week on week, and getting better, getting a little bit better off of a pretty difficult bottom. On the Eats side, we're seeing that business actually substantially accelerating. That was a big business for us that was already growing very, very quickly in the 50% range. And in April, we saw the growth outside of India, which we divested, around 89%, as more and more people sheltered at home, as more and more restaurants signed up for our service. And obviously, delivery is a very, very growth area for us. So it was mixed. We're still working on how we react to the crisis. We've got a great balance sheet and we're a diversified business, which we think gives us an advantage in a very difficult time.
Let's talk about the strength piece, which is this Eats business, which, that was going to be a loss-making business for a long time. Explain what you think is happening, how it transforms itself, and whether you think that this is just a pull forward, if you will, because of this unusual moment we're in, or whether you think it's transformational in terms of what the world looks like, not just in the next several months, but years from now.
Well, we think that it is transformational in that Eats is becoming a more and more important lifeline for many restaurants out there, especially small and medium enterprises. Dining in is essentially over for now and for some foreseeable future. So many of these small businesses are finding a lifeline, finding a business in delivery. And I think that they're discovering that there's a lot of demand out there. We've always seen historically that eaters, when they start using Eats, they stick around with a service. It's a very high frequency service. And once you try it, you tend to stick with a service over a period of time. And we think that we have just had an enormous influx of people trying it, a category getting much, much bigger. We are now working to get into some adjacent categories like grocery, like delivery as well. So we think it's an accelerator, but it's also a transformation. The Eats business just got a lot bigger.
Dara, I want to bring Becky in just one moment, but I have one quick question, which is cost. One of the things you're doing is planning to provide, if you're not already doing it, PPE, masks, and other supplies for your drivers. And I'm trying to understand what you think that does to your cost base long term.
Yeah, Andrew, it's definitely going to cost us, but the cost is not the forefront in our minds, frankly, right now. safety is the first priority for us. When we reach out to our riders and eaters, they want to feel safe during this deeply, deeply uncertain time. And we have ordered millions of masks. We're ordering cleaning supplies, talking to many, many players out there to, as consistently as we can, to get masks and cleaning supplies in our cars. We are working on very interesting technology that we're going to introduce to the public as it relates to safety, which we think is unique in the industry. We want to set the standard, and I think a lot of the competition will follow. The business itself, the business model of rides, has the kinds of profits that we think can ultimately support these costs. But right now it's about safety first and then manage costs later. And I do think that's the right priority for us.
Hey, Dara, can I go back just to Uber Eats? Yeah, just going back to Uber Eats, because, that was a little contentious even before we got into this pandemic about how restaurants were getting their cut of what the profit was going to be and how Uber Eats was taking its cut. And I know there was a little bit of back and forth where people were trying to figure out how that was going to work. It's going to get even more complicated now that restaurants are facing such financial issues and problems of their own, and they've seen such a huge loss of revenue. So how does it work? How much of that money goes to Uber for Uber Eats, and how much goes to the restaurant, and how do you try and find good partners where you can all work around a smaller pie?
Sure, absolutely. So when you look at the Uber Eats business, the cut we get paid for our commission, so to speak, and then the cost of delivery as well. And that's expressed as adjusted net revenue margin of the business. The adjusted net revenue margin of the business is around 11%. And the Eats business right now is not making a profit. We lost about $300 million in EBITDA in the quarter. We think that profitability will be consistent in Q2 and then will improve going forward. But we're still losing money in Eats. So I think that we are doing our very best to set and create the most efficient delivery mechanism. We're not making a lot of money on this business, so it's not like anyone is charging undue rents. And at this point, we believe that the best way to get outsized demand to our restaurants is to take down delivery fees as much as we can, especially in small and medium restaurants out there, to make sure we push very big demand from our consumers who are at home, who are going to order out, to the restaurants, to give them that lifeline and allow them to thrive again and build again in this new environment, which is going to be different.
Hey, Dara, you alluded to technology that you're working on. What kind of technology in terms of that would help with the safety issue here?
Yeah, we'll have more to tell you. There's a lot that we have to show, but we do have the best technical team. And for example, on the safety side, one interesting technology that we're going to be shifting with some great work from our engineers is that we had a selfie type of technology to make sure that the driver who was licensed to drive, who was licensed to be on the platform, was the actual driver who's driving you on a daily basis. We're using those kinds of technologies to make sure that the driver is making safe choices, including having a mask on.
And are you anticipating requiring all passengers to wear masks? Do you anticipate providing those masks? I should say, by the way, as this interview has been going on, a driver tweeted at me saying that he's not getting PPE. He says he doesn't understand what that's about. I don't know how that's working in this particular moment, but just speak again, if you could, to the mask issue and what that looks like. Absolutely.
So we are taking the lead of governments. First of all, there are going to be different laws on a local basis, and we want to make sure that we abide by those laws. We are in the process of securing all the PPEs and the masks, and the fulfillment, getting those to the drivers themselves, is very, very difficult, as you can imagine. We have some centers where drivers can come pick them up. We try to mail them to their homes, et cetera. So we're by no means perfect. And we're really going to take the leads of the governments, and, we're very global company, city by city, state by state. We're going to make sure that we comply with the laws and that we set the standards for safety.
In terms of making additional adjustments to the business, layoffs, real estate issues, you've spoken about some of that earlier this year, but I'm curious if you expect there to be more.
We do have to adjust our cost base to the new reality. The rides business, like we said, it was down 80%. It's coming off of a low. And we stated to Wall Street that we are going to be profitable. Our goal was to be profitable in Q4 of this year. That's going to be delayed until next year, but that is going to require a shift in cost base and taking a look at where we've made bets. We did announce a layoff. It was very difficult of some really great people this last week. We announced the merger, for example, of our Jump Bikes subsidiary with Lime to create the largest players, but take those losses off the books. So everything's on the table now. This is a deep crisis. And while we are very well suited to weather the crisis, we still have to make adjustments, and that absolutely does include costs.
Right. Policy question. As you know, there has been a debate for many, many years about gig workers, the responsibilities of the company to its contractors, whether they should be considered employees and the like. And clearly, so many of your drivers could now be considered in many respects frontline workers during this pandemic. And I think there's a newfound respect and appreciation across the country for all of the people that are working, whether they're working at Walmart at the checkout counter, whether they're an Uber driver, bringing people food, bringing people the necessary supplies. And I just wonder whether you think it changes the conversation in a different way, makes it actually more, I don't want to say more complicated, but potentially more complicated for a company like Uber, who may have to take on more and more responsibilities for the people that it's working with.
Well, we hope it changes the conversation. We do believe that these workers deserve protections. And we've always been a proponent of a model that creates flexible work. You can get on anytime that you want. You can earn anytime you want. If you don't want to earn, you can do something else. And I actually think in this economy where jobs and earnings are going to be at such a premium, it's all the more important to have a system like ours, which can be an entry point into earnings. Now, we've always been a proponent of flexible earnings for anyone, and I think in this environment, it's all the more important, with protections, with healthcare protections, with minimum earnings, and that is absolutely a dialogue that we want to get into. And we believe that that dialogue is going to create, and what we are standing up for is going to create a better system. It's going to be an on-ramp for work, and it's going to be work with minimum earnings protections and health protections as well.
Dara, does that mean that you'd be willing to consider a worker who spends more than 40 hours a week as an Uber driver, as an employee?
The model that we're talking about is that you can work as many hours as you want during the week. It doesn't matter if you work 20 hours a week or 40 hours a week, and you get protections based on the number of hours that you work. You know, I think this system of if you don't work 40 hours, you're not full-time. If you work 40 hours, you're full-time. And then there's this hard break between the two. That's the old world, right? It's actually, if you're putting in the hours, if you're putting in the hours, you should get minimum earnings based on the hours that you're working, and you should get health care based on the hours that you're working. And if you have a have and have nots based on a particular number of hours worked, that doesn't make sense in a technical forward world.
Well, does that mean you'd be paying for the health care benefits for those people who are working 20 hours or 40 hours or 60 hours? How would the benefits work out?
Based on, we would put, we've actually talked to folks about this. We would put monies into a fund based on how much our drivers or couriers have worked that would go to fund healthcare benefits, and they would have minimum earnings as well. These are the discussions that we want to have with government. And again, you can have the benefits.
Let me ask about that. I mean, what's the difference? What's the difference in having them called employees or having them pay this pool? Is it a much lesser amount of money that you'd be putting into a healthcare plot than you would if they were working 40 hours or something? I understand your point that it's not fair to cut it off at 20 hours, but I would also understand the point of somebody who's working 60 hours saying, I'm still not going to get what I would get if I was a full-time employee somewhere else. How does that break down?
Yeah, I think a lot of full-time employees get different healthcare coverages, so it's difficult to generalize and say it's going to be equal to X or Y. But what we're aiming for is healthcare that would be generally comparable, healthcare that works to protect you, and minimum earnings. based on a number of hours worked. And what we're looking for essentially is that flexible on-ramp or off-ramp. You want to work, you get the benefits. You don't want to work, you don't.
Finally, Dara, one of the things that I'm curious about is what you think is going to happen to pricing. In the old world, there used to be huge demand, obviously, especially at certain times. There was surge pricing, premiums. In a world where maybe there's going to be a little less moving around, what happens?
So I think that in a world where you've got less demand for ridership, usually pricing remains somewhat subdued. So we don't see, and by the way, that's not a bad thing. As people return with the economic difficulties there, we do think that the pricing of getting an Uber ride is going to be attractive. And then on Uber Eats as well, we've been reducing the cost of delivery, especially for those small and medium restaurants, to make sure that the friction of getting onto our systems and using our services is as low as it can be. So I think pricing is going to be a good place when things come back. And again, we're seeing demand slowly come back. We've seen week-on-week demand for rides now increase 4 weeks in a row. We know that the road to recovery is going to be uneven, but at least the green shoots are there, and we're going to work to be kind of a sponsor of those green shoots.